What if the difference between you losing money and making your first $10,000 is just copy and pasting my simple strategy? I'm about to give you the exact strategy that I use that took me from second guessing every single trade to just stacking $10,000 over and over and over. I know this can sound too good to be true, but it's not. It's a consistent system that works if you repeat it over and over. There's no fluff, there's no gimmicks, it just works. Now, before we get rolling, I want to make this very clear. This is not a get-rich-quick scheme. I want you to copy me, but I want you to copy my process, not the trades that I'm making. If you can repeat this process over and over for a long period of time, you're going to do extremely well. So let's get into a swing trade here. This is Starbucks. Starbucks, as you can see, it's had a rocky road over the last year or so, but right now I'm noticing that we might have something potential coming down. And you might be looking at this saying, well, you want to make money on the way down rather than the way up? That's too hard. I'm out. Well, stick around here. If you want to be a good trader, if you want to make that $10,000 a day, you need to be a two-way trader. Think about any athlete. Think about a basketball player. They need to be able to play offense and defense. Baseball player, offense and defense. Hockey player, offense and defense. That's the same thing with trading. You need to be able to go both ways. You need to be a two-way player. So you need to be able to make money on the way up and make money on the way down. Now, here's the good news about it. It's not much different. When we're making money on the way up, I'm going to just briefly go through a couple of things here, then I'll dive more into it. We want to have our trend pointing in the positive direction, pretty easy. We want to have our candles or the price going in the positive direction, pretty easy. Now, looking at it the other way, we want to have our trend going in the negative direction, and we want to have our candles or our price going in the down direction. So basically what I did is I took the chart and I flipped it upside down, and that's a short. That's exactly what shorting is. Don't get convoluted with what people say out there. Oh, you can lose all your money. It's infinite losses. Of course it's infinite losses. But if you use a system that works, it's not infinite losses. Anytime you're using a system, you're not going to lose all of your money. If you just let it go, of course you're going to lose all your money. That's absolutely stupid. So let's look at Starbucks here from a shorting perspective. What do we look for? The first thing when I open any chart is I look at the trend or the stochastic. And I like to catch, if I'm going long on a stock, if I want to make money, I'm trying to catch it down here at the bottom. These two horizontal lines that I'm going to draw over. Bottom, 32%. Top, 80%. What are these? In between here, this is my sweet spot. It is my area that I have the highest probability to make money. Remember, trading is all about probabilities. It's not a guaranteed science. You have to accept that you're going to lose, but you want to give yourself the highest probability to make money, and that's what you're going to find in the sweet spot. So going up, we want to be in the sweet spot. Coming down, we want to be in the sweet spot. It's the same thing. Remember, I told you we're just flipping the chart upside down. So looking at this, our red and yellow lines are moving into the sweet spot. That's great. We have a check mark there. Then we go and take a peek at the volume. What is volume? Volume is the number of shares bought per day, and you can see here on the bottom, some days are red, some days are green. When there's red days, it means there's more selling volume than buying volume. When there's green days, it means there's more buying volume than selling volume. We like to see when we're coming down, obviously people selling. Why? Stock price is going to drop. When we're going up, we want to see people buying. Why? Stock price is going to go up. So if we're looking at this, we need to say, all right, we're getting selling volume. So we have a check mark here and we have a check mark here. We don't know what the volume is yet. Stock market just opened at the time of making this video, but yesterday had really good volume coming into the stock. Now think about volume as gasoline that's going into your car. If you're trying to go up a hill in San Francisco and you don't have a lot of gas left, what's going to happen? You're going to stall out and you're not going to make it. If you have a lot of gas, you're going to be able to get up that hill. That's the same thing as volume. The more gasoline you have, the more people buying or selling in the respective direction that you're going, the better off you're going to be. Now, the last thing that we look for, I shouldn't say last, but one of the last key indicators that we look for is what's called an engulfing candlestick. So yesterday you noticed we had a thick red candlestick moving down, and today we have a thick red candlestick that's beginning to move down. On the contrary, we had a candle back here, you had a wick on the top, you had a wick on the bottom, and a wick is just this smaller area. All throughout here you can see big wicks all over. Look at this one right here. You have these large wicks on the top and bottom. We like to see big, thick candles. Why? That means that there's a lot of people going in the right direction. So today, we had the stock open right here, and now it's just selling, 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 and I'm hoping that it goes further. Yesterday, you had an open right here, selling, 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 selling. The thicker the candle at the bottom when you're shorting means that the stock price actually held there at the bottom. It didn't go back up. If you have a wick like this is what happened on this day. You opened right here, you fell down, and then you rebounded back up and you closed the day right here. You got rid of half of your gain that day. The idea is you want to see these large engulfing candlesticks taking out the low of the previous day, or if you're going long, taking out the high of the previous day. But let's focus on shorting right now, taking out the low of the previous day. So right now we're getting a really nice candle that's developing. I'm not saying I'm going to go and short this right now, but I have three great things going for me. Trend in the sweet spot, good volume coming into the stock, and I'm starting to see an engulfing candlestick. For this, I'm going to wait until after 10:06 in the morning. It is 9:38. It's about to be 9:39 right now. Why do I wait till after 10:06? There's a lot of stuff that happens overnight. Options trades are settling. Overnight trades are settling. There's news that's coming in. God knows what's happening with tariffs overseas. All of that gets settled in the first 36 minutes of the market. So I don't make a trade until 36 minutes of the market are cleared out. Then we reassess and see where we are. This looks great right now, but this could very easily end up all the way up here in the next 20 minutes or so. I don't want to take that risk. Now, you may be looking at this saying, well, how do you find stocks? It's a great question. And funny enough, I come over here to Yahoo Finance. This is one of the ways that I do it. And funny enough, Starbucks closing to close underperforming stores, slashing 900 jobs, probably why the stock price is down right now. That's great. I come over here to markets. I go to most actives. What does most actives means? It means the largest amount of volume being traded. So if we look at this, RIG down 14%, but take a look at the volume. The average volume on this is 28 million shares traded per day. Volume right now, 56 million. There are 56 million trades on an average volume of 28 million trades over the last 30 days. Over the last 3 months. That is, and it's 9:40 in the morning. It's been 10 minutes. That's crazy. But you can come in here and cherry pick these. So why don't we come and look and say, all right, RIG, write that down. Open, Intel, just keep going down. Write down these 25 stocks. Tomorrow, come back and do the same thing. Next day, do this for 5 to 10 days in a row and see which ones are repeatedly on there. I can promise you that RIG will not be on there on a consistent basis. Open Door Technologies likely won't be on there on a consistent basis. Actually, maybe it will because of what has been going on lately. Big Bear AI, I don't know. Rigetti Computing, probably not on there. Oklo, probably not on there. Why am I saying this? You want to find stocks that consistently trade the same amount of volume or that are always in the top 25. Why? It makes it easier to trade. I often get people asking me the question, Mo, I'm trading AT&T and I can't make any money. Well, it's because AT&T sucks. There's nobody buying it. There's nobody selling it. There's no movement on the stock. It's a dinosaur stock. You need to find stocks that move on a repetitive basis day to day. That's one way to come find it. The other way is just come in here and see your biggest gainers. These are stocks that have the biggest move during the respective day. So that's one way you could look at it. You can look at the big losers. Here are the top losers. You can see what are the big losers of the day. A lot of stocks down pretty big. But what I like to do, I like to go to most actives. Why? It gives me the best opportunity to see over a 5-10 day period which stocks are consistently in there. Now, another great way of doing this is joining our Patreon community. That's where I find all of my stocks. I don't do this anymore. Any stock that you see here is on these 2 watch lists are from our community. Duolingo, CCL, Jets, they're probably not the most sexy stocks in the world, but that doesn't really matter. I don't care. It brings it all back. I don't care what the stock is. All I care about is the pattern. You can come through here and you could say, let's block this out. I don't care that this is Starbucks. Doesn't matter to me. Don't care about this. I honestly don't care about the price until I have to go and see how many shares I can trade. None of this matters. None of this matters. All that matters is this right here. All that matters is the trend. I can trade anything. I can trade crypto. I can trade currencies. I can trade commodities. It really doesn't matter. All that matters is this. Now, of course, the price matters when I need to see how many shares I need to buy. But that's not the point that I'm trying to drive home right now. You need to be able to trade the pattern. And that is why these stocks in here are in here on a consistent basis. This is my watch list. This is a community watch list that comes from the community. They are constantly screening. They are constantly chatting. They are constantly sharing information. It's a great place to be. If you're new, trading can be a very, very lonely road. I promise you that. I was there. We were all there. Join the community. Link is in the description below. Give it a month try. Give it 2 months try. What do you have to lose? You don't have anything to lose. Give it a shot, and you're going to find a nice home and a nice base that's going to prevent you from losing a lot of money right off the rip. Now, these are 3 indicators that I gave you: the trend, the volume, the engulfing candlestick. There is more to it. These are your basics, but there is more to it. I made a video right here. It's about 2.5 hours. It's chaptered. It gives you every single thing you need to know about trading. It gives you your chart setup. It gives you your checklist. Go check it out, and I'll see you on the next video.